Simply, we're going to continue to look at the US dollar. We're going to continue to look at the pound and the euro and the yen. These are the main currencies I pay attention to. As you guys should know, I'm a G10 trader, so I focus on the major currencies, whereas the other trader at Elite Traders primarily focuses on exotics, miners, commodities, and stocks as well. So when we look at the dollar, there's a few different things going on. Now, there's been a lot of talk about this downside move we've had recently. And yes, it was quite a large move, but have we broken the overall trend? No, not really. It's well, just over a 2.5% downside. When if we zoom out, we've got a very, very clear and a very strong move to the upside that, in my opinion, is unbroken. Um, so what does that mean? Well, the main thing regarding the dollar, why we saw this huge dip was obviously some sort of relief that we saw on this upside. And what was causing the upside? Well, I'm going to say there's two main things. There was firstly, obviously, very positive US data. We saw very strong labor market data. We've seen GDP doing quite well. And overall, the US has been performing very strongly. But the other factor is what Trump's been saying as he was coming into office, which was largely about tariffs. So tariffs obviously benefit the US dollar and hit negatively to other currencies like the euro and the pound and any other currency that obviously he's applying tariffs to. So it could be the Canadian dollar, it could be the Mexican peso, but you get the point. So now we know a little bit more about the tariffs. And when I say a little bit more, I mean a very, very small amount. We don't still really know what he actually wants to do with tariffs, but this is what this downside was essentially is um, kind of, yeah, a relaxation of the uptrend that we've seen due to a lack of certainty around tariffs and the very small amount of information we did have. The second layer, or the third layer actually, is the rate cuts that Trump wants. So if you guys are watching Trump's WEF, which is the World Economic Forum's speech that I live streamed, so hopefully you were there, as soon as he said he wants rate cuts, immediately the dollar index plummeted, or when it yeah, relatively plummeted. Um, that was a real negative sign for the dollar. However, obviously Trump isn't the one that implements rate cuts, it's the Fed. So generally speaking, we don't need to pay too much attention to that. We need to continue to pay attention to what the Fed is going to do, because obviously the Fed is the one that calls the shots in that scenario. So if we take a very quick look at what the Fed Watch is saying, let's go on to, well, we know January is very likely to be a hold. That's already priced in. Then we've got March, which is the next one. This is where people are starting to reprice a little bit. This is the one where people are saying, okay, is Trump going to sort of force a rate cut? Is Trump basically going to go to Powell and say, look, I want a rate cut. You are going to do a rate cut? We don't know. So far, it's not priced in fully. We can see the rate of a hold or the probability of a hold is still 72.4%. The probability of an ease is 27.6. So we're not really in dangerous territory in terms of the Fed actually cutting rates. So again, we'll have to take that on a data by data perspective. So for now, my outlook on the dollar remains bullish because the fundamentals, the overlying macros driving this market are still bullish, regardless of what Trump has said and whatever else is going on. The core fundamentals are still bullish. Phantom says it's a trap. It very well could be a trap. We could see the dollar absolutely drop off a cliff, but I don't think we will. If we do see downside on the dollar, I would expect it to be down to this 105 level and then a continuation to the upside, again, following the macros. Um, However, the way the market is looking at the moment, I'm quite comfortable to say that we are going to continue to the upside. And, tomorrow after markets open and London session, I could be looking back thinking I'm such an idiot, but for now, I'm quite happy to say that we are going to see some upside on the dollar. We have seen some rejection here at around the 107.5 level, so I'm quite comfortable with that. In terms of the euro and the pound, now we've spoken about the pound quite a lot recently, so I'm not going to go into too much detail regarding the gilts and the government debt because again, I've spoken about that a lot. There's a lot of content in the Discord about that. I made a video on it. However, the pound seems to have had a bit of a recovery. Now, this isn't necessarily a fundamental move. The same as the euro. So what we typically see when markets or when specifically the dollar does something, whether it moves up or down, we tend to see the opposite effect on other currencies, specifically the British pound and the euro. Now that's just the capital flows. That's just the way the markets work. If you see the dollar moving to the downside, you're going to get out of the dollar and buy a different currency like the British pound or the euro. That's again just the market dynamics. We see capital inflows of one currency, outflows of the other. So I'm not too concerned in terms of, or not really too bothered either way about the euro strength or the pound strength that we've seen. So overall, the UK pound is still not in a great spot. We know that the government's in trouble. We know the Bank of England basically has to cut rates. It's not really an option at this point. Um, Now there is some hope. We saw PMIs come out better for the pound. We also saw CPI come out lower, suggesting that the Bank of England is going to cut rates, which in this case is actually a positive sign for the pound. It's not, and I'm just going to go a little tangent here, but typically the narrative that retail traders have is rate cuts are bearish, rate hikes are bullish, and generally that's the right idea. But there are situations like this where a rate cut does actually support the pound. So we do have that. I would be still looking towards selling the pound, but not necessarily as bad as it was 1 or 2 weeks ago, because that was pretty detrimental. At least now, again, we've got inflation cooling. We are looking like we're going to have a rate cut by the Bank of England. In terms of the euro, still not great. We had a little bit of positive data come out, but again, generally speaking, it's very, very poor, especially when we look at it relative to the US dollar. So I'm not looking to buy the euro, not looking to buy the pound. I'm looking to short those currencies against the US dollar, and I will continue to do that until the data says otherwise. Now, the yen, we will get into some actual trades soon, by the way. I'm just going over the indexes first and the individual currencies, then we can move on to some trade setups. So the yen is in an interesting spot. So we did see a lot of people buying this move to the upside. And I understand and I get it completely. There was a lot of talks about the Ministry of Finance intervention. There was a lot of hype, especially in the retail community, about the Bank of Japan rate hike. But again, if you were in elite trades, you've been paying attention to what we've been saying. This rate hike really didn't do anything. I mean, look at what the yen's done since we've had the hike. Basically nothing. So we saw some pricing in. We saw, yeah, basically that was it. Some pricing in of the rate hike on the yen. But in terms of the technicals, this is still a lower high. This doesn't mean anything in terms of trend or macros or anything really. So if we look at what the yen is doing or what the yen fundamentals and data tell us, it's still significantly weaker than its counterparts. So like the dollar, the pound, the euro. So I'm still not interested in buying the yen. However, what I am potentially looking at is dollar yen shorts and longs. So I sent this analysis out today in the Telegram for free. I wanted to save this for the Discord though. So following what I just said, if we're not looking to necessarily buy the yen yet, what we could do is play this dollar strength that we're currently seeing and the yen weakness and go in for a long position on dollar yen. However, the big problem really within dollar yen, excuse me, is 160. Now, if you guys, again, if you have access to bank reports, you've got access to any sort of institutional data or information, you will know that 160 has been in view and is currently in view by lots of large players in terms of it being the danger zone. So what we're looking for, or what is expected, is dollar yen will get towards 160 or get to 160. Then we'll see a Ministry of Finance intervention, which is when they essentially pump money into the yen to slow down the depreciation, and that will generally push these yen crosses to the downside temporarily. It's not a long-term move. It's generally actually very, very quick. And then we can often see the market start to reverse quite quickly as well. But it's something you do need to pay attention to because if you're in a long position like this and you haven't moved to stop or you haven't realized profits, there's a high chance you will just get stopped out and lose the money that you could potentially have made. Um, Pullback should be done by Tuesday. Australian dollar trend, yeah. Yeah. Okay. Yeah, Phantom. I think we're on the same page here. So dollar yen longs look a lot more attractive compared to shorts. Shorts, you possibly could get something in here, but you would be essentially gambling. It'd be more a case of I am placing a bet that the Ministry of Finance is going to intervene between 160 and 165. That's all you've got. There is no real edge there at all. Um, Now let's move on to pound dollar, euro dollar. Both these markets are still bearish. The moving averages haven't crossed. Moving average is a great way to identify a trend. The trend line, I mean, the trend line's quite rough, but that's not really been broken in my opinion either. We are at quite a strong level of previous support and now resistance. This is a very sort of classic break and retest pattern. And again, institutional targets on on the pound dollar is at 1.2. That's still the forecast. I haven't really seen any revisions to this. So I would actually be tempted to go short as soon as possible. Depending obviously how the market opens and how sort of Asia and London develop. I'm not saying I would do it as soon as the markets open. Again, let the markets breathe and have some time to open and see then. Um, However, this does look like a pretty solid level to go short. We could get a nice 3.5 return. So, yeah, not the worst situation. If we do start to break above this level and start to hold and see continuations of bullish movements, then I'm afraid to say the trend's broken, and I might be starting to sit on the sidelines a little bit more and wait for a development in terms of data. Similar thing here with euro dollar. It's basically the same setup. Obviously, euro dollar and pound dollar move in a very, very similar way. Parity is still in view, although I'm changing my idea a little bit. I've been saying that we're going to see parity very quickly. I thought we would see it within sort of the end of Q1 to mid Q2 this year. That was, was kind of what I've been saying since I say September, November last year. However, with the recent uptick in euro data and the current dollar weakness, I don't want to be greedy. I don't want to sit here and say that I'm going to trade into parity because, to be honest, it could take until the end of the year. Obviously, it really depends on the euro data and the dollar data as the year develops, but still, the point is there. So I'm still looking to short, but again, into parity, I don't know. I'm going to have to just take this market as it comes. If we see setups, we'll take them, but not being greedy is not the way in this market right now. Um, Phantom, you think parity about April? I was on the same path, but I'm not completely against it. I'm not saying it won't happen. I'm just having a little bit of a doubt at the moment. Oil is the next interesting one. So oil oil is tricky to gauge, in my opinion, right now. So we've got overall a bullish sentiment on oil, in my opinion. So we've still got OPEC that are pausing or slowing down their production. So obviously, when production comes down, demand increases. It's typical supply and demand dynamics. Um, and oil, excuse me, oil generally likes to be around sort of 70, I'd say 78 to $80 a barrel is sort of oil's comfortable zone. So at the moment, we are out of the average price, you could call it, of oil. Um, the big thing that I see that's standing in the way of oil at the moment is Trump. So again, just referring back to the WEF speech that we saw by Trump, he is very keen on OPEC lowering their prices. So increasing the supply to sort of water down the oil prices a little bit. If they do that, of course, oil is going to dump to the downside. Maybe not dump, but it will see a very, very big hit. I mean, we already saw that again during the Trump speech. Oil moved crazy, crazy to the downside. I think we saw, I can't remember exactly where it was. It was about 2.5 to 3% move to the downside, though, as he was talking. And we've seen that just sort of continue for the rest of the week. So the way I view oil right now is continue to the upside until we've seen action. And the reason is because Trump at the moment is saying a lot of things that are moving markets, but he isn't actually doing anything. We've not actually seen much action to change markets, if that makes sense. So I'm not keen on trading just words. I want to trade on data. And at the moment, the data for me is still bullish oil. So if we take that into account, dollar CAD is still a long position. Sorry, is still a no trade range. I don't know why it's a long position. Because what we've got is, although dollar CAD actually does seem like quite a good trade on paper, if we're also looking to long oil, this market doesn't make sense to trade, in my opinion, and the way I trade. We're looking at the correlation that just doesn't work to go long. So obviously, when we look at oil prices, we're looking for a strong oil. We also should expect a strong Canadian dollar. So if we're buying US dollar, we're selling dollar CAD. That means we don't expect much from oil, which isn't really the case for me at the moment. So dollar CAD, no go zone for me. We are still in dollar Swiss trade here, which is currently sat in a bit of drawdown. Obviously, we took a hit last week when the US dollar also took a hit, although the trade is still alive. But yeah, to be honest, that's about it in terms of what I'm actually looking to do. You wish you shorted it before the Davos speech? Yeah, it would have been good. Um, I was saying actually I wasn't keen on oil, but I didn't take any action, unfortunately. So gold is actually the next market I want to cover. Although I'm not looking to trade gold, I think we do have some quite nice downside coming on oil on gold. I'm not willing to take a trade because I don't have the data really to back up this idea. But if we again look at what the US dollar's been doing, we've seen a pretty large depreciation on the dollar recently, which obviously was helping to boost gold. We saw a large inflow of gold, basically slight inflationary pressure, and we also had a lot of uncertainty around tariffs and around Trump, which was benefiting gold. Obviously, the markets don't like uncertainty. However, we are at previous all-time highs. The dollar, in my opinion, is now at a reversal point. I'm not saying it's definitely, so don't go full margin dollar. But I think we are very likely to see the dollar start to gain some strength again from here. So it wouldn't be a silly idea, really, to look to possibly go short. But again, there's no data for me to actually take this trade, but it's just an idea. So, if you like it, go and do some research. So let me just take another quick look and see if there's anything I've missed. So by the way, for anyone that doesn't know, we do have this research page on the new website, so you can go and see what trade ideas we've got that's built from just macroeconomics. There's no levels or anything for you here. It's not signals. Um, it's purely just information. Uh, so yeah, there's not too much. Short Nasdaq, I don't like this idea because it's relying on future data releases rather than off the current data. So for me, it's a no-go trade. Long the S&P, I think, is probably a good idea, especially if we do start seeing rate cuts due to Trump. I think long S&P is pretty sound, actually. But again, that's off possible data. It's not off current data. So what was I going to do? Yes, news coming this week is quite important. So let's just see what's in the pipeline. So we've got Chinese data that will be effective for the Australian dollar and New Zealand dollar. So it's manufacturing PMIs and non-manufacturing PMIs. German data, not overly relevant. We do have new home sales for the US. That will be likely not massively market moving, but it's still something to pay attention to. It does give us insight into the health of the economy. Um, ECB bank lending survey. Again, I wouldn't expect it to be a huge thing, but it would be interesting to see. We don't have too much really until Wednesday when we've got heavy news for the Australian dollar late at night. Canadian dollar interest rate decision, US dollar FOMC press conference as well. That would be a big one. So we will get the rate decision then. European data for Germany, Euro data. So Thursday will be a heavy Euro day. So yeah, towards the end of this week, will be very heavily focused towards the Euro. So make sure you pay attention if you are involved in that one. Um, Clean update. I'd argue Germany data is highly influential for Eurozone. Yeah, Phantom Euro, sorry, Germany is a huge factor for the euro, which is why we've seen actually such a weak euro is because of because of French and Germany data releases being very poor. They're like the two one of the two main contributors actually. Is the S&P and the SPX on the Edge Finder? Let's see. Actually, let's pull up the Edge Finder and see what is there. Um, let's get rid of neutral. So we've got Dow actually reading the strongest buy. Nasdaq is very bullish. The S&P is here as a reading as 6. Nothing too huge, but it is there. Pound yen. Actually, a lot of the yen pairs are very bearish at the moment, which is interesting. Yeah, I'm not convinced on shorting. Sorry, I'm not convinced on going long on the yen at the moment. Um, so yeah, S&P is there. Also, what we do have is this. I didn't know this was here, actually. I'm not sure how long this has been out on the terminal, but we can have a look together and we can see what the current readings are. Just give me a second to load it here. Um, Phantom, yeah, I mean, GU doesn't have to follow. GU is just very bearish on its own, regardless. So overall reading on the US dollar is very bullish. Euro is very bearish. Pound is neutral. CAD is very bearish. Australian dollar is neutral. New Zealand dollar is bearish. Yen is neutral, and the Swiss is bearish. So USD CAD actually on here makes sense to go long. Um, Dollar Swiss longs as well are already in. Mm, obviously Euro dollar shorts as well. Okay, interesting. But yeah, to be honest, this has been a relatively short one, just because there isn't too much I'm focused on other than dollar crosses. So if there is any questions, feel free to ask. I'm happy to answer. I'm also actually in this euro pound position still. So again, for anyone that does watch me on a regular basis, you'll know I've been dollar cost averaging euro pound to the downside, looking for a mean reversion, almost back to average price. So I'm looking for these previous lows or these multi-year lows down here at 0.825. We also know that Citibank is in those trades as well, or in this trade as well. There's actually something else I quickly wanted to show you. Now, this is just give me 2 minutes to show you this. Um, let's see. So this is MUFG, MUFG's bank report. So they are looking for this US dollar weakness to continue, which I think is good. I agree with them. But then if we go ahead and have a look at HSBC, they are looking for basically the opposite. So they have actually gone long on New Zealand US dollar, which again, I don't really agree with. Actually, that's interesting. Edu. Don't know how to pronounce your name, so I'll just call you Edu. So yeah, there you go. HSBC's long on New Zealand dollar, which again, I don't really agree with, but they are looking for a continuation of this dollar weakness. In terms of what I see, though, I would be expecting New Zealand US dollar to continue to the downside. And the reason is because Chinese data isn't very supportive at the moment. We're not seeing much of a recovery. I am also in the camp of saying that China's actually um, smudging or fudging some of their numbers. I think the economy is a lot worse than they're reporting. So I would be quite happy to actually go short on this market and basically counter trade HSBC. Again, dollar strength we'd be playing on that quite heavily here. So I would be I'd love to say that the market could come down here to sort of zero point 0.5, but that's really ambitious. I'm not comfortable saying that that is a realistic target at this time. Maybe in a couple of weeks or a couple of months, maybe, but right now, I think I'm being a bit too generous. Um, so an aggressive trade like this would make sense. I think, again, it's not really the way I trade. But yeah, I overall think New Zealand dollar is bearish. Any updates on the Elite House in Thailand? Almost, yes. I was actually talking to my consultant today. We're not, well, I'm not moving to Thailand anymore. I don't think it's going to be Malaysia is the new place, I think, just because their taxes are reasonable. Their requirements for a digital nomad visa are a lot easier to obtain as well. Um, so yeah, I mean, here's a little bit of information for you. I don't really know if anyone will care. Um, but traders on well, actually, yeah, traders on social media specifically quite often say or show off how rich they are and how well off they are. And I'm not saying they're not, by the way, but I'm just saying if you're a large capital trader, generally speaking, you're not leaving a lot of money in your bank account. Generally, you'll reinvest it. You'll either compound your account or you'll put it into property, you'll put it into investment accounts, whatever it may be. And that's what I do. I keep generally around 2 to 3 thousand US dollars in my account, and then everything else gets shoved into investments. Because I'm much more orientated around long-term wealth rather than, buying a Rolex or having a Lamborghini or any of those types of things. I just don't care. So for Thailand visa, you need around 10 to 12,000 in your account for 3 months. And I don't want to have that. So it's a lot easier for me to just get the Malaysian nomad visa, which I just have to prove my income. So yeah, it's no problem. Anyway, sorry, that was a little bit of a tangent. Reese, the bank reports, we send them out every day in our Discord. So I can show you that actually. So this is the Elite Traders Discord. If you go down here to bank reports, we send them out every weekday. We send them out as a zip file, and then they come out like this. So you'll see we get a whole list of these bank reports in PDFs that we can then just go ahead and read. So that's how our members get the reports and how I get the reports. Phantom, yeah, exactly. Anyway, guys, I don't want this to run on too long and start boring people. So again, if there's any questions, let me know. If not, we'll call it a day here, and you will see me around this week. So I'll give you guys a minute or two, and then I might end it or answer any questions. Bitcoin is doing quite well, actually, which is nice to see. We've finally broken above 100K and managing to hold that level. Um, Natural gas is actually reading as a short, which is interesting. I don't trade natural gas, but it might be quite a nice trade, actually. I'm going to have a look into natural gas with my commodities guy, and we'll see if we could possibly go in for a short there. But guys, that's it. I don't see any more questions coming in. So guys, have an amazing rest of your weekends wherever you are, whatever time it is. I will see you around. If you're in the free Telegram, you will, of course, be getting some free source throughout the week. If you're in the Discord, we'll take care of you as always. Guys, see you later. Thank you all for joining as always. I will see you very, very soon. Uh, okay, see you.